Did you know that Jim Cramer revealed the rationale behind Wall Street's continued optimism on Tesla stock? It should be mentioned that the earnings for the second quarter surpassed the street's projections. It seems that Wall Street is still optimistic about Tesla's stock a few days before the company releases its third quarter financial report. You would not want to overlook this information. It means, of course, margin is going to go up, not down, and that's what I care about, declares Jim Cramer. American television personality and author James Joseph Cramer is better known by his stage name, Jim Cramer. He is the anchor of Squawk on the Street and the host of CNBC's Mad Money. In 1987, Cramer founded Cramer Berkowitz and served as its senior partner in addition to managing hedge funds. With his expertise in the stock market, Jim Cramer founded Cramer & Co., a hedge fund. From 1987 to 2000, Cramer managed his money and had just 1 year of negative returns. He ultimately announced his retirement from his hedge fund in 2001. During the course of the 14-year period, he generated an average yearly return of 20.24% and an average of more than $10 million. Jim Cramer is best known for hosting the CNBC program Mad Money, which he went on to host in 2005. Instead than trying to influence viewers' opinions, the show aims to educate them on how to think like seasoned investors. Over the last 10 years, the program's popularity has steadily increased, positioning it as one of CNBC's most watched investing programs. All my career, I've been fascinated by companies with vociferous bulls and ferocious bears, if only because they can be so entertaining, Cramer once stated. 2019 saw the initial introduction of the concept of investing in Tesla by Jim Cramer's daughter. She chose to hire a Tesla while traveling from Oregon to Los Angeles. She wasn't into cars before. Cramer recalls, but she was amazed by how much she liked driving an electric vehicle and how easy it was to refuel. According to Cramer, she said it was the most fun car in the world. Although Cramer himself had doubts about the firm and cited the high price of the stock, his daughter was completely convinced on Tesla. However, Cramer's daughter stated that she thought Elon Musk, the CEO of Tesla, was credible. She added that because Cramer was too elderly to recognize the possibilities of electric vehicles, he had a prejudice against the company. Cramer remembers her stating, "I want to buy Tesla stock and I'm going to save up to own a Tesla." Sure enough, she bought in and saw Tesla's stock increase 10 times. Cramer states, "She had conviction, she did the work, and bought it," he states. Thus, Tesla gained a new devotee who was a harsh critic in 2019. Jim Cramer of CNBC's Mad Money goes from being an agnostic skeptic of the electric car producer shares to a blatant bull. The host of Mad Money said that he had grown to love Tesla and now views the company as a battleground stock. Cramer really declared in 2021 that Tesla is a huge buy right here. Jim Cramer, host of Mad Money and the Squawk on the Street crew, talked about Tesla shares a few days ago after the company released its dismal third quarter delivery numbers. Just 1 day after the firm revealed third quarter production and delivery figures that were below analyst projections, Tesla shares dropped more than 8%. Estimates gathered by FactSet-owned street accounts show that Tesla reported 343,000 total deliveries and 365,000 vehicles produced during the quarter, missing analysts' forecasts of 364,060 vehicles delivered. The closest estimate of Tesla's stated sales was provided by deliveries. Compared to the previous quarter of 2022, when the company reported making 258,580 cars, the total production climbed. According to its report, Tesla produced 345,988 of its more popular Model 3 and Y vehicles and 19,935 of its more costly Model S and X vehicles during Q3. Yes, I believe it moved some production up to different places, but JP Morgan is my model. They have an underweight and don't like the stock, but they did raise the price objective, which I find to be really intriguing. However, I do believe that Wedbush is still bullish. Cramer says, bringing up margins, inflation, and businesses looking to offset losses. According to Cramer, Tesla will succeed the most because he considers such things. The other folks still manufacture internal combustion engines, so they have to improvise. I'm talking to Mercedes this morning about the concept of switching to electric vehicles and how advantageous it is to own a Tesla rather than having to worry about internal combustion engines. There are thousands of people producing automobiles and trucks that the world will never need. When asked when he believed that a really competitive set will defeat Tesla, Cramer responded that it would be able to achieve a 500,000 run rate by the end of the next year. However, Ford has not been able to meet our expectations thus far. And everything that has been reported thus far about a Ford's is bad, and it has to do with costs. Let's move on to commodities, nameplate issues, and warranties. Thus, even though I have faith in Ford, they must be able to follow through on their promises, says Cramer. It should be mentioned that although Cramer started to support Tesla in 2019, by 2022 he declared his preference for Ford above Tesla stocks. In a March interview, Cramer said that despite his former optimism for Tesla, he prefers Ford shares. He claims that Ford is getting ready to overtake Tesla and take the lead in the EV industry. By 2026, Ford is reportedly hoping to build over 2 million electrified cars. Experts, however, think that Ford and Tesla are in quite distinct markets. In terms of AI advancements, Ford is still a whole generation behind Tesla, despite Ford's attempts to catch up. Regarding Wall Street analysts and experts' perspectives on Tesla's production and delivery figures, the report from the Electric Vehicle Manufacturer Cost Division and the company's declining stock price implies that investors are apprehensive about the delivery figures. While a JP Morgan analyst held an underweight rating on Tesla, stating that the business's expectations were met, a Goldman Sachs analyst kept Tesla's buy rating and stated, "The company will continue to benefit from the long-term shift to electric vehicles." In a note sent out after the Q3 deliveries report, Jeffrey Osborne, Cohen's managing director for energy sustainability and mobility tech, stated Tesla has ample cash and has undertaken a meaningful global manufacturing expansion with facilities in China, Berlin, and Austin, Texas. With the latter two approaching full ramp, Tesla's emphasis on energy efficiency and investment in battery technologies may make them difficult to catch in the near term, even though the competition in the EV industry is still fierce. With a price target of $244 per share, Cohen rates Tesla stock as market perform. Tony Sekinagi, senior research analyst at AB. Bernstein stated in a note that came out after the deliveries data that he believes it is now improbable that Tesla would be able to meet its guidance range of 50% growth in deliveries for the fiscal year 2022. Bank expressed the bank's increased optimism for Tesla as a whole and stated that although the company has only demonstrated a first-generation prototype of the humanoid robot concept known as Optimus on Friday of last week, it still sees potential for this project. Additionally, he mentioned that Tesla is still developing its supercomputer Dojo for artificial intelligence and its self-driving capabilities. He stated there remain numerous challenges in the performance of the system that the team is working on, such as lane selection and left turns, but it continues to progress well toward its goals of deploying to the entire North American Tesla fleet by the end of the year. The company is sticking to its $400 per share price objective and thinks Tesla is one of the best stories in the auto industry. The Investor Relations Department of Tesla revealed in a news release that the firm will be reporting its third quarter